Video, I'll give you guys an update on the Nasdaq, the Dow Jones dollar index, as well as gold. Also tell you exactly why the stock market has been so bearish, and I'll also tell you how the NFP data that's coming out in 2 days is going to further impact the market as well. Now, if you are new to the channel, a sub would be appreciated, as I provide valuable educational content on a daily basis. And if you enjoy the video, please leave a thumbs up for the YouTube algorithm there as well. Now, before we get started, I just want to give a special thank you to the members of the channel. Here's a long list. The list has been growing so rapidly, and I'm not going to run through all of these names, but thank you so much. Hope you guys are still enjoying the perks and services that you receive, and I really appreciate the support, as well as for everyone else that's taking the time out of the daily life to come and watch the content to further educate themselves. Now, we are going to speak very quickly about the stock market that has been on a negative point over here. It says here stock extends the losing streak a third day. Dow closes 300 points. Now you can see here the Dow Jones has been bearish basically for most of since the 17th of August. And if you have watched the previous video, and I'll basically leave a link, or I'll get a pop-up to come out here somewhere, you would have known I actually made an analysis when the market was sitting at this level and explaining all of the reasons why. I can see the market test that neckline of the W formation, which is here. Okay, and like I said, and if you were able to get in, I'm still holding a sell on the Nasdaq from that level. But again, like I said, if you were able to get in that high, please let me know down in the comments below if you were able to get in this move there as well. Now, going on over here, it says that stock fell for a third day on Tuesday, jeopardizing a summer comeback rally as the Federal Reserve and other global central bankers continue to signal that they will raise interest rates. Now, if I have to take you back to 73 before I ever had to sell a multi-platinum selling CD, just joking, guys. So if you see here, okay, it says here that, because the Federal Reserve is basically continuing to signal that they're going to hike interest rates. As a result of that, the speculation in the market at the moment is that because the Fed is going to hike the interest rates. Now, for those of you that has been long on the channel, I've explained this over and over and over and over again. If the Feds hike the interest rate, the dollar index increases in value, and the stock market tend to see a plummet. Now, you know what the funniest thing about what's going currently on in the market is that all of these things that you see here, right, this is all based off speculation. And the funny thing is the price action also speaks for itself, because that way at this level of support got broken and it's acting as support, as resistance. But this is all based off speculation. Remember, the Feds will only hike interest rates in the coming months, okay, and in the coming days here. They still have to hike interest rates on the 21st of September. But because they've been continuously speaking about hiking interest rate, the markets are getting spooked, and they do not want to be there when the Feds actually hike the interest rates as aggressive as they might have anticipated. Now, it's important to keep in mind that we do have the NFP data coming out on Friday as well. Now, if the NFP data comes out higher than expected, then the Dow Jones is going to continue to fall. And you're probably sitting there going, but why would the stock market fall if the jobs come through higher? Because if the NFP data comes through higher, you can expect the market to continue lower, because that's going to further spook investors that the Fed will hike interest rates more aggressively. Because think about it, if the stock market is going down, now I need you to listen to me very carefully, right? The stock market, the Nasdaq, is a composite that is made up of 100 tech companies, okay? Now, this is basically what happens. So you've got the Nasdaq over here, right? This is the Nasdaq. And then you have the consumer over here, right? Not the consumer, but you've got an employee over here, right? So just to give you an example, this is an employee. If the stock market is doing very bad, right? If the stock markets, if companies listed on the Nasdaq, okay, if they are not doing that good, how would employment increase? I hope you guys understand what I'm saying. If the companies are not doing that well, it means that the unemployment should have come down. But if the employment data, if the jobs come through as expected, and where is it now? The NFP come through higher than 295, then that means something is not right. Because how is companies not doing too good, but there's still new jobs being created? And we saw that with last month's report as well. So just know that if the NFP data comes through higher, you can expect the stock market to get further spooked, that the Feds are more likely to hike interest rates at a 0.75 basis point there as well, which brings me to my next point. We've got the ADP coming through today. We've got the PMI. We got the average early hourly earnings. We've got the NFP coming through on Friday. And like I said, if this data comes through higher than what it is here, and if unemployment is lower, then the stock market is going to continue to tumble to the downside. It says here the S&P was down 1.1%, dropping below the 4,000 levels. The Nasdaq was down 1.1%, and the Dow Jones was down also 1% there. The market also had losses to that began on Friday. So we know on Friday when the Powell said, when Powell was testifying in the Jackson Hole Symposium, and that's basically when the markets got spooked already. It says here, there was also some comments that came from the New York Fed President John Williams. He says that I do not think with demand far exceeding supply, we do need to get real interest rates above zero. We need to have somewhat restrictive policy to slow demand, and we're not there yet. And basically what that means is that, as long as inflation is currently sitting at an all-time high, the only way to reduce that is to keep continuously hiking the interest rate. Now, if you're sitting here thinking, okay, but does that mean the Nasdaq is going to continue to fall and fall and fall and fall? Unfortunately, that is the case. If the Nasdaq could climb up all the way till there, nothing is stopping the Nasdaq from going back there again. This was all due to low interest rate, and this is going to be the reason why interest rates will be continuously to hike. Now that we've got the fundamental data out of the way and you know what to expect when the data comes through, it's time to do a technical analysis. Now, if you start on the monthly time frame with the Nasdaq, we can see the market is currently testing and rejecting the strong level of support that is now acting as a resistance. The market printed this massive impulse. So after an impulse, you expect a correction. Then if you take your Fibonacci from the high to the low, you can see the market tested, rejected the 61.8. Now, in order to measure the next take profit level, you need to take your Fibonacci on the correction, and you can see we do have a minus 27 target that's lining up perfectly with this structural level that we could potentially see the market create at this level, and we're going to use that as a long-term target level there as well. Now, here on the weekly time frame, what do we see? Now we can see the market had printed this overextended W formation, failed to break to retest the left leg. The market broke below that. This level acted as a level of resistance, broke above that, came to test it as support. Support did not hold, and the market is currently testing previous resistance as now support here as well. Basically, what we are sit with here on the weekly time frame is we can see we got these two structural levels that the market is currently trading in between. We also have a gap over here that the market still hasn't filled or has filled, I think, that we need to take into consideration as well. Now, these are the two levels that we are going to monitor currently at the moment. But on the daily time frame, what do we have? Now, here on the daily time frame, I expect the Nasdaq to continue lower. Now, we can see that this level over here acted as a level of this is a structural level in the market here, and structure is created when there's a green candle next to a red candle, and this is basically what we are faced with at the moment. So we could potentially see the Nasdaq start this consolidation phase, and then from there we could potentially monitor the price action. But I would say, in order for us to be safe, I would say that between today and most likely tomorrow, we could see the Nasdaq go test that previous lows over there, and then when the NFP comes, we could potentially dip below this data as well. Now, the way to approach the NFP data is if that data comes through higher than expected, you can expect the Nasdaq to dip below this level. Then on that retest, we could potentially see that as well. This could also be the start of a consolidation where we could see the market also start moving in between these levels here as well. Nice traders, we have to be reactive and not predictive. We have to learn to adapt to the ever-changing market environments there as well. Now, Dow Jones is not seeing the best of the best over here. The Dow Jones showing a price action. We have this level over here that acted as support. The market came back to test it as a resistance. And if you remember, when the market was sitting here, I said the market was going to go down there exactly, and that is exactly what had happened. Now we can expect the Dow Jones to move lower and go and print this level, basically at the start of a monthly consolidation phase there as well. On the weekly time frame, what do we see? We do have this W formation that the market is currently testing at the neckline, but again, you can't say that the neckline is going to hold without proper validation. There's a good saying in the market, they say that you should never catch a falling knife. The worst thing you can do is to buy a market that's busy falling. You need some confirmation of some buy stepping in before you actually buy this market here as well. Now, the biggest problem that we are sitting with here is that we have this level of support that the market had printed. Yesterday, we saw the market rejected this level here as well. But the problem that we are faced with here is you can see that this level over here acted as a strong level of, and I'm going to include that entire wick over there. In fact, I'm just going to leave that there. So what we have here is, like I said, structures created when there's a green candle next to a red candle. The market printed support, broke below support, came to test it as resistance. Now, there is a high possibility that the Dow Jones could go for a deep liquidity grab. Alternatively, we could potentially just see the Dow Jones fall lower, go and test this previous level over here, or basically, I would probably say up until there, we could see the Dow Jones and then potentially see a pullback in the market as well. But like I said, I do want to take this one step at a time. So I do expect, the Dow Jones to probably dip slightly lower. And then from there, obviously do another update. It's also important that you take this, this structural level into consideration here as well. And it's also very, 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 very easy to get on the wrong side of the market here as well. But what I would also be looking out for, and not to confuse anyone, is we do have this very, very, even a much better structural level that it acted as a level of support that the market yesterday tested and rejected. Then we can see how the market is about to move to the downside. So these are the two target levels that I would be looking at trading here as well. Now, as always, we have to be reactive. If this daily candle, if this market pulls back and we close above that level, then we can expect the market to continue higher and then from there drop to the downside. And like I said, it's very important that you apply the rules that you know as well. Next up, we do have gold. Gold's not be doing too well. Gold is still doing absolutely nothing. Now, I'm just going to go on the daily time frame, because when I made this breakdown, and if you guys can remember, the market was sitting at this level over here, right? And I said that we can expect the market to break below that level. And once again, that is exactly what the market had did. Now I guess it's time for an update. Now there's nothing much to see over here other than the fact that gold's going to continue lower and go and test this previous level as support. Now this level is also the monthly structural level that gold has been consolidating in for a couple of months now. And going back on the daily time frame, what do we have? Now if you look left, you can see gold is had broken below a very strong structural level as well. Now, what would be good to see is if we do get a daily closer below this level, okay, then we can definitely look for selling opportunities. But the problem that we are set with now is gold printed this massive impulse. After an impulse, you expect a correction. Taking the Fibonacci from the high to the low, you can see we do have a 50%, 0.50% lining up perfectly with this structural level here as well. Now, the 0.50% is normally a 50% retracement of this massive impulse that we had over here. Now, we could potentially see gold start this pullback till there, and then before continuing lower there as well. So that is how I would be approaching this situation. Now, because I do trade with a set of rules, I will obviously wait for the market to show some bullish momentum and then start looking for buying opportunities here as well. But like I say, we have to take these trades one trade at a time. Alternatively, if we do get a daily candle close below this level, then by all means we're going to look for that short-term selling opportunities to the downside there as well. Okay, there we go. So next up, we do have the dollar index. Now, again, here on the daily time frame, the dollar index is basically trading sideways, basically awaiting this data to be released here as well. So like I said, we are not going to see any movement in the dollar until the NFP data comes out. If the data is positive, then boom, we're going to the upside. If the data is negative, then we can definitely see that move to the downside. Now, that's all from my side, guys. Thank you for your time. And as always, cheers for years.